Learning Unit 10 does, it covers, I think, 5 different chapters. So it's quite a comprehensive study, but within each chapter it just covers certain points. Okay, so it's 5 chapters, but not the complete chapter. And it basically covers, I would say, all the functional areas of management. So at this point, we're preparing for the summative. Once I'm done with this session tonight, I'm going to upload a paper that I would like for you to maybe go through before our next session so that we can go over exam technique there. So yeah, as discussed, this learning unit is sort of the culmination of the course, and it looks at all the functional areas of management. So it breaks down all those middle management functions. It looks at human resources, operations. It looks at, let me just admit, right, it looks at marketing management, the different orientations of marketing. We go through supply chain, and then at the very end, we do financial management. So as we start off with human resources, for each chapter, what I have done, you'll see at the corner of each slide, I have put in the objectives that need to be covered for this theme. Okay, so when you use your textbook, just make sure that you are highlighting just the headings that need to be covered and not the whole chapter. Right, so in terms of human resources, we look at, firstly, we start off with human resources because it is the most important aspect when dealing with management, right? In terms of human resources, we look at how to get the best skill into our organization. But in addition to getting the best skill in, we look at how we can maintain that skill so we reduce turnover, as well as how we develop human resources within our business. So when we speak about human resources, we speak about acquisition, maintaining, and then development. So when a business starts off, it looks at all the roles that it needs to achieve, and it breaks down the different aspects that need to be done into different types of jobs. Those jobs then have a description, and that description then tells the manager or the hiring manager what type of skill they are looking for. Once they have that, they can then start the acquisition phase, which is now seeking the correct professionals to match the skill set that they require for their job. Through acquisition, there's various different types and methods that they go through. The most common type is looking inside of the organization. They can look externally. And once they acquire the correct skill, they then go through maintaining it. So once you employ your human resources, there's numerous things that you have to do to maintain that skill in your organization. And that ranges from ensuring that you treat them correctly, that you're training them correctly, that you're offering them opportunities to grow, and maintaining that level of inquiry within your organization. And then the last thing that you need to consider is development of their skill. So when you get to the next round where you have a new job and a new sort of description that goes through it, and you need to acquire skill, you look within your organization because you have adequately developed your current skill. So after a period of time, when you start to acquire or look for new skill, you should be looking inside your organization first. Okay, I hope that makes sense. So in a business, it's not just about going out and finding skill. There are numerous factors that are outside of the business's control that affect skill and affect the type of employees that you have. So we look at the macro factors that affect employees, and it's very much to do with your demographic factors. So the population that you are existing within, what type of skill level do they have? And this affects your business in numerous ways. So if you are predominantly in, I'm going to say, area where they have a lot of trade skills, and suddenly you need somebody with higher order skills like management skills or top level management skills, you're going to have to look outside of your demographics. Economic factors, and this is growth, inflation, will affect the type of salary that you use to acquire or attract new skill into your organization, and then as well as political factors. And political factors refer to the stability in the country, as well as the legislation that you need to abide by. And so we know that in South Africa, there's a lot of political factors that influence the legislature, and that goes together in terms of hiring. So you need to ensure that you have, you employ according to BEE, you have enough representatives across your workforce, and all of those aspects affect the employees that you have. And then there's social factors in terms of poverty, how people are able to develop themselves, and then technological factors which change rapidly over time. And you are constantly looking for employees to upskill themselves. And sometimes that means that you have to take that initiative to skill them on your own. Okay, as well as, so these factors also affect companies negatively. So in terms of technological factors, if you have a workforce that's quite large because you used to do things manually and suddenly technology develops and now you're able to acquire technology that reduces your staff complement. The difference between studying human resources in a management qualification is that you have to learn to manage those situations in terms of a humane way. Okay, so yes, it does save costs to get in the machinery, but we have to outweigh the effect that has on people and how we do it and how we retrench. And so we have to think about the factors that go with that. All right, all good for now? Okay, and then obviously with everything in management, there's a human resource process that we look at, and we speak about selection, orientation, selection, recruitment, and orientation. So the human resource process, we obviously strategically look at our organization and to look at the objectives that we want to achieve, the plans that we have in process. We then develop strategic plans focused on HR. Okay, so this might mean that a plan strategically for HR may mean to increase our workforce. It may mean to upskill our resources, workforce in a certain skill. It may be to increase emotional intelligence, to increase a different level of management within our skills. So there's different objectives that you will set for your department. Okay. Once you've set that, you then start to compile skills of employees that you have, and that then allows you to sort of take an audit of your current workforce, and it gives you an idea of what you are lacking and then what you do need to acquire and attract into your business. Okay, then you conduct an HR demand and supply forecasting. So what do you need in terms of your organization? Where are you lacking? And then what do you have? That will then give you an idea of how you deal with your employees in terms of upskilling what you already have, and in some cases, reorganizing. Okay. And I think previously, we spoke about job rotation, job enrichment. So if you're in a situation where you have an excess supply of employees, it's not always the best thing to look at retrenchment, but rather if their skill set can be advanced and it can be utilized elsewhere, then it's about engaging those things like job enrichment, job rotation, moving them around. Okay, employment equity plans are very important within our context, and that's ensuring that you comply with representation and in terms of BEE. And so you get the correct skill, but also complying with legislation. Okay. Your action plan is just telling you what you need to start doing, how you need to start employing. And in some instances, you can't action that plan immediately. You have to start to implement in stages just because you may not have the budget to do so. Okay. Once you have all your human resources in-house, it's never ending because you constantly, it's people leave and people come in and new skills come up. And so it's constantly evaluating. But through that evaluation, it's also determining weak spots within your staff complement, places where you need to improve, places where you need to upskill and work on additional sort of incentives to keep them interested. It also means that as a manager, part of your monitoring and evaluating is to understand that when you started off this process, you determined your needs. You've also determined your salary and your remuneration structure. But a good HR manager understands that if they want to maintain the skill, then they have to keep abreast of industry changes and what we call an industry benchmark, which is ensuring that your staff is being paid or remunerated in line with industry. Okay, and that's where you'll see sort of your salary increments or adjustments come in if you are not paying accordingly. Okay. I think in terms of HR, when we think about it, it's more than just somebody that needs a job. It's about maintaining skill set. And in most industries, when somebody is really good at something, because we say a company is only as good as the skill that they have, they want to maintain it because competitors they will hunt down your employees. So it's to keep them engaged, to keep them interested, to keep them wanting to work for you. Okay. We also talk about economics of scale in human resources. So the same goes for workers that perhaps have a technical skill. Okay, it doesn't only mean your top strategic management. When you bring employees into your organization, and even if it's manual labor and it's simple processing, after a period of time, people tend to do things quicker and they tend to do things better and they learn that skill. When they leave and somebody new comes in, it takes them a while to learn that skill and that slows down your processes. So maintaining your staff is important and it increases productivity. Okay, and then in terms of selection, recruitment, and orientation, when employees enter your company, they are either new to the job market or they come from previous institutions, right? If you are working and you think of yourself, you are part of your organization. You are part of a culture. You are used to doing certain things. You go into the office in the morning or wherever you work, even if it's from home, you know the people, you know what is acceptable there, and it is a part of you. So when people come into your organization, they are bringing a bit of that culture in. And sometimes it's difficult to adjust to a different culture. So in doing so, you need to adequately support your employees to adjust to your culture. Okay. So in terms of selection, it's obviously bringing in the correct skill into your organization once you've gone through the HR process and you've identified what is lacking and where your demand is. And then you go through the step of recruitment, where you look inside, you look outside, you advertise, you go through recruitment agencies, you interview, and you get the correct person. Okay. Once they are in, you have to go through an orientation process with them. And that can usually span between a week or 2 to 90 days, which is advisable, where you take them through all the important and key people in the organization, the processes, the culture, and things that help them adjust. If you don't go through this and they don't tend to work out, then it is a default on you and they can prove that you didn't give them a good enough chance to succeed in your organization. So you have to have a set process in place. Okay, it's like when students come into our organization, we have an orientation program, and that just is aimed at helping students adjust to the new environment. Similarly, in an organization, you need to have that orientation process. And it needs to be a little bit more than just having a cup of tea with the manager. Right? It needs to be guiding them through processes, emails, the way things are done, right through to basic things. Okay, are we still comfortable? Right, if you joined the call a little late, As I discussed, so this learning unit covers a variety of chapters, but not every topic within that chapter. So on the slides at the of the slides, I've just put a snippet of the themes that need to be covered. So please, when you take your textbook, just highlight those headings. That will make it easier so that you don't learn things that are not needed, as well as when you sit that exam, you already have the headings that are highlighted, so you're not going to look beyond that because you're going to have limited time. Okay. One of the other factors or functional areas of a business that we look at is marketing management. And marketing is, taking your products out and making your customers aware of them. Okay. But marketing management is a little bit more than just advertising your product. So it looks at the strategies that your company has in place to market their products, right? In order for marketing to take place, there has to be an exchange and there needs to be 5 conditions for exchange. Okay, please remember this. It's just something that tends to come out. Okay, so for exchange to take place, there must obviously be 2 people. We must value each other's commodities. So I must either want your money and you must want my product or vice versa. We need to speak about delivery. So once you pay me, how do you take your product? There has to be freedom for choice. I can't force you to take it. You must want to do it. And I must want to have this exchange with you. Okay, so in very simple terms, 2 people who want what the other has, knows it's a freedom of choice, knows when to get the product, the desire to give and receive the product, and once that is done, there's an element of exchange. Okay, this seems so basic, but when it comes to a product and it comes to something being wrong with that product, if you want to take any sort of legal ramifications around that, you have to prove that there was exchange. Okay, which means that if I didn't give you the product and the product breaks, it's still my fault. But if you paid me for a product and asked me to keep it in my storeroom because you wanted to take delivery sometime but didn't come and take delivery and it breaks, it's not my problem. Okay, so it's those type of things that determine whether exchange had happened or not. And that does become important. Okay, so when a company decides on a marketing strategy, okay, they don't just create one. There are a few different types of marketing strategies with different focuses that we can look at. The first one is production. All right. We look at our organization, we look at the skills that we have, and we can produce products. So we go on producing products. We're not really interested in who we're selling these products to. We are just focusing on producing. So we produce the products, standard products, and that's it. We produce it and hope that somebody will buy these products. Okay, so we're very focused on production. Then we sit with all these products because we didn't bother to find out who wants them, if they need them. It's a case of producing Nokias, those 3310s in this day and age, right? The other alternate to that is sales orientation. And sales orientation is sometimes a result of production orientation. So with sales orientation, we focus on selling. And we don't really care about the price that we are selling at, but we need to get rid of the supply of stock. So we sell below cost. We sell it with huge discounts. And when I say it is normally a result of production orientation, is because when we adapted production orientation, we were so focused on manufacturing products that we didn't bother about who we're manufacturing for, what they want, whether it's worth their while. We just started to produce. After we produced, we're sitting with the stock and nobody wants them, so we have to start selling, and we have to sell them at next to nothing because something is better than nothing. Okay. Then we have a marketing orientation, and this deals with understanding what your market wants and catering your products to that market. So this can range from just understanding that, look, I am operating in either a higher end range and I cater to this particular niche market. So I produce, items that offer certain standard, to actually catering to an individual's need. So I can maybe cater to the area in which I am, and I know that this is a vegan place and there's a lot of vegans, so I only make vegan food and I sell it. Or I will make a specific vegan cake for a customer that comes to me. Okay, so very focused around understanding what my consumers want and only catering to them. Obviously, that does mean that sometimes your products are very niche and it doesn't allow you sort of a vast customer base. Okay. Societal marketing orientation looks at a community and their interest and caters products to them. So if I am operating in an area where they are sort of very aware of the environment, and if I sort of use products that are non-recyclable, nobody's going to buy my products. So I cater, all my products are recyclable products, they're eco-friendly, and I'm adjusting to the society in which I am in. So I make sure that I cater to their needs. If I am catering, if I have a store in a gym, for instance, and I know that whoever frequents this is trying to obviously be calorie conscious, and I'm not going to open up a bakery in a gym. Okay, so I'm going to cater maybe skinny wraps and that type of things for the society in which I am in. And then the last type is relationship marketing orientation. And this is where I'm not just focused on that once-off sale with you. I want to create a relationship with you so that when you need something, you're going to come back to me. And this is sort of your hairdressers, your nail technicians, maybe a bakery or whatever it is, but you know that if I think I want to have a haircut, I'm going to that salon. I know I'm going to that salon. I know who I'm asking for because I've built a relationship with that person. Okay. That does mean that you have an ongoing sort of sales with that person until I don't know, they leave or you upset them or something like that. All good so far? Perfect. Okay, the next type is operations management. And operations management deals with the actual manufacturing process. Now, operations management is very relevant to the operations industry, okay, so your factory settings. And the importance of having operation management is because it helps achieve objectives. It ensures that you are producing products in the best and most efficient way. So you increase productivity. Everybody knows in the organization what needs to be done. So it creates that good impression around that. It reduces wastage and it keeps up staff morale because people know what they are doing. Okay, operations management deals with um, the the process, right? So it's your inputs, your transformation process, and then your outputs. And this is about boosting your customer service, reducing overall costs, and ultimately doing the best that you can with your resources. This process is relevant to all manufacturing processes. In very simple forms, your input is everything, your raw materials that goes into your transformation process, which is doing things, and your output is your final product. Okay. If you put in good quality stuff and people know how to handle that stuff and turn it into something, you're going to get a good quality product out. If you put in low quality stuff, you're going to get low quality stuff out. If you put in good quality raw materials, but your employees don't know how to make something, you're going to get a bad quality product out. So it is important that whoever works in the different sectors of the operational loop, that they keep on providing feedback to whoever, to the team. Okay, so that we make sure that whatever goes in through that process, it's maintained, and whatever comes out is something that is good. Okay, do you need a break or are you good to carry on? Great. Okay, in terms of supply chain deals with the entire process of getting materials in for that operational process to actually selling that product to the customer as well as after sales. Okay, so I think it was 2 years ago, they did ask students to draw the supply chain process. Okay. When they say graphically draw, if you are asked for it, please you don't have to draw the pictures. You just have to show the process. Okay, so you got to show raw material, supplier, manufacturer, distributor, retailer, customer, and show me that it's a process, not the actual pictures. Okay, so supply chain looks at each process in the manufacturing process, and it tries to understand where can we do things better, where can we do things faster, where can we improve quality. All right. Your raw materials, it involves sort of sourcing raw materials, the best raw materials at the best cost. It means ensuring that if we are importing raw materials, that we are aware of the exchange rate. It means trying to source materials locally, trying to ensure that we are doing it that is eco-friendly and in line with the health and environmental laws that we need to follow. It's about creating that supplier relationship. So remember, as much as you are paying your suppliers, you are dependent on them. Because if they do not supply you with raw materials, your manufacturing process stops. Okay? There are various institutions where businesses that just can't manufacture because they don't have adequate suppliers. Also, in the manufacturing business, a way to beat your competitor is to get their supplier. So if there's only one supplier of raw materials and two competitors, and suddenly your supplier now is supplying me, you don't have a supplier, which means there's a delay in your manufacturing. Okay, so supplier relationships are important because of that, as well as when it comes to negotiating terms of payment. It's very rare for a factory to be able to pay their raw materials off. So it becomes important to have a reputation with them and a relationship with them that you pay them over 60, 90 days so that you can negotiate your cash flow. In terms of manufacturing, it's that whole operational cost within your process within your factory. And then making the products is one thing, right? It's about then distributing it. Okay, so who is going to take your products out? How are you going to get your products to the relevant retailers? How do you ensure that the quality of your product that leaves your factory reaches the retailer in that same condition? Is there a distribution process available for you? So if you make bread, for instance, and there's no distribution process to get to the store or the retailer, that bread is then going to become stale because you didn't have a reliable truck to come and pick it up in the morning. Okay. Then it's about ensuring that your products reach the correct retailer. Now, this can simply mean ensuring that the products reach all the retailers, or ensuring that your products are reaching the retailers where your target market is. And then even further within those retailers, are your products being stocked or stored in the correct place so that customers can see your product? Okay. And it sounds simple, but it is, if you have a product that focuses on having natural ingredients, that's an alternative to sugar, and it's very healthy. But you have then sent it to a wholesaler or a pick and pay, a chain store instead of a health store, and this chain store like Pick n Pay takes it and puts it in the sweet and chips aisle, it's not going to reach the correct target audience. Okay, so it's about ensuring all of those things. If you have a new product, it's ensuring that after that distributor takes it to the retailer, there's somebody there to market that product as being new. And then to ensure now that your retailer, like I said, is getting it to the correct customer in the way that you intended it to go with the correct message. Is that customer happy? Because if they're not happy, they're going to go back to the retailer who's going to come back to you. Okay, and you'll often find that if you buy a product and you take it back because it's not good, the store is happy to take it because they're going to send it back to the manufacturer. Okay, if one thing fails in this process, the supply chain process is off, it's thrown off, and there is a delay in it, and that becomes very costly. Okay, so there are four basic functions of supply chain management. We look at purchasing management, operations management, which we discussed, logistics management, and integration management. For this course, you're just looking at purchasing management, and it's the structure that's put into place to buy your goods, your raw material for your goods and services. Okay, so purchasing has to make sure that there is a continuous flow of raw materials to make your products as well, so that you have a continuous flow of products to give to your consumers. You must remember that if there's not sufficient products for your consumers, you are allowing them an opportunity to go to your competitor, and sometimes they won't return. Okay. If you think about yourself, how many times have you been to a store, simple stuff, maybe the toothpaste that you use is not there, or the soap that you use is not there. You took the next best, and you know what? That was fine. It was actually better than what you wanted, and you never went back to the other one. Okay, so don't allow your product to be out of stock because you are allowing your customers to go to your competitor, and sometimes they never come back. Right. Okay. And then very lastly, we look at financial management. So your textbook has a whole lot of ratios that deals with financial management, but you don't need to know them. You just need to know the basics of financial management, and then the only calculation that you have to know is the cost value profit organization calculation. Okay, it's your break even points, and then your break even in rands. So just those calculations, they're very simple, and I'll show you how to work through them. So your cost profit analysis, that's all that you are doing. All right, you need to know in terms of financial management, you need to know the different elements of the financial statements. So your statement of financial position is essentially what we used to call a balance sheet, and that has your assets, your liabilities, and your equity. Okay, assets is everything that your company owns. It's value to your company. You have your long-term assets and your short-term assets. So your current and non-current assets. Your non-current assets are things that you can't convert quickly into cash. So your buildings, your land and materials, vehicles, equipment, those things do have value. But if you are in a financial difficulty, it's harder to go and convert that into cash. And then obviously your current assets are things that you have in your bank account, cash on hand, anything that you can sort of convert within 12 months. Liabilities is what we say the opposite of assets. So these are things that you own. Similar to assets, you have your current liabilities are non-current. Current liabilities are things that you tend to pay off within a year. So your revolving loans, your suppliers that you've negotiated terms with, and just people that you owe and you need to pay off, either at the end of the month or within a certain period, but it has to be less than 12 months. Non-current liabilities are those things that your sort of your bills that are longer than a year. So your home loans, or in this case, your business loans, the hire purchase of your vehicles, whether it's your trucks or your cars, those type of things you tend to have to take longer to pay off. Okay, in terms of equity, there are three things that affect equity. So equity in terms of the capital that your shareholders give in or the owner puts into the business. Equity can be in the form of cash as well as equipment, land and buildings and vehicles. Okay. It's essentially the owner's wealth in the company. The owner can draw against the equity, which means they take out finance or money from the company. This is not a salary. This is the drawings that they are taking out because they need it. So when I put equity in terms of capital, and I draw out money for myself, I'm reducing my capital in the business. And then income and expenses influence equity because when we have income, it grows equity. When we have expenses, it decreases equity. Okay. Income is all the way that money comes into our business, so it's sales predominantly, and expenses is everything that we pay out. So all your operating costs, as well as if somebody buys something, but then they come and return it and you have to pay out. Okay, so very general definitions of that. Are you comfortable with that? All right. So in terms of the calculations, we are going to look at the relationship between the different types of costs that we have. So you usually have, okay, so income is obviously calculated with your sales minus your expenses, right? Or your cost of sales. Now, when we look at a business and we produce goods, we need to know where's that point that I need to sell products so that I cover my expenses. Okay. So that is known as your break-even point. It's the point in which I have sold just enough products to make zero profit, but I'm not owing anything on my expenses. And it is important to know that because when you start off a business, you need to know at least how many I need to sell in order to cover costs. Anything after that then becomes a bonus because it's a profit. And that break-even point can be calculated either in units or in rands. Okay, so it's a very simple way of calculating it. Okay, but you have to understand the way the different types of costs work. All right, so we use a formula called n minus n equals to f, and then we look at SP minus V. So similarly put, n is the number of units or the volume that you need to break even. So how many units do I need to sell to make zero profit but cover my expenses? And then SP minus V is the marginal income of variable profit. Okay. SP is sales price per unit. V is variable costs and F is total fixed cost. Now, like I said, we have two different types of costs. Fixed costs are things that do not change regardless of what happens in the business. Okay, so things like my rent, my fixed salaries, those things stay the same whether I've made one product or I make 200 products. The rent that I have to pay for my building every month is as per my lease, and that stays. If it's 10,000 Rand, it stays at 10,000 Rand. If I make one product within that place, I still have to pay 10,000 Rand. If I make 10,000 products, I have to pay 10,000 Rand. Those are fixed costs. Variable costs, on the other hand, they are things that change with production. So if I have to produce 5 products, the cost of material will be a certain amount. If I produce 10 products, that cost is going to increase because I'm going to need more material. If the number of products decrease, that amount is going to decrease. Okay, so we need to understand that relationship um, before we can work that out. So I'm going to share something different with you so that we can go through a calculation. Can I just get an indication for those on the call? How comfortable are you with working out this? Have you done it before? Is it something that I need to go in detail when working out? Okay, that's great then. Okay. So let me just share an example quickly with you. Right, you would have seen on ARC, I have included an example and then some activities for you to go through. Let's just see. Right, I'm going to share my screen. Okay, you should be able to see my screen here. Okay, so there's an example that says Josh. I think there is a Josh in the class. Sorry if you're still here. Has recently purchased a bakery that specializes in croissants. He's working through his finances and would like assistance calculating the number of units required to cover his expenses without making a profit. Okay, that's another way for them to ask you for break even. When you are stressed in that exam and this is usually at the end of a paper, just know that they're asking you for break even. Okay, sometimes they won't exactly ask for it. Okay, then you've got a table with the different types of costs that they have. Each croissant is sold for 30 Rand and you need to calculate break even. Okay, so the first thing we need to do is the calculation.